All right. Tyler, you get yours under contract last night?
No, they just rescinded this morning to go look at other properties.
Oh, dang.
And I was trying to send the initials, I initialed it and then it sent it and it was all blank. I don't know why. So I got to figure out the technology part of that, I guess. Where I did the strike through. I put the initials beside it, sent it, and it wouldn't allow them to, it didn't show up.
Yeah, you would have to download it and then re-upload it. You have to save it. Like you can't make changes to it again. So you need to kind of download it and then re-upload it and then add more or send it to them to have signatures.
Okay.
Does that make sense? Because I mean, once you make a change and then add signatures, if you go back in and try to change something else, it's going to take those signatures away.
Okay.
Because that way people would be like getting signatures and then making changes in the documents and them not being actually the one that initialed it. That makes sense. So, was the buyer completely done with it? I mean,
he said they've rescinded it for now to go look at other properties. That's what he said. So,
how big of a difference was that counter? I didn't even pay attention when you sent it.
Well, it was like going to be like 10 or 15,000 difference. Yeah, they offered like 30,000 off of what the seller wants, you know.
Gotcha.
So we got them to come up get closer. So.
All right.
The timing of that, though, you know, expired last night.
That's how it works, my man. I kind of felt like that was probably going to happen, and I mean, it would have been nice to get under contract right then, but maybe these people will come around and they will counter again. So I would just keep up with them throughout the day and reach out to me this afternoon and see if they're still potentially interested. So
I got a client of mine under contract yesterday, though, a buyer. So
nice.
Yeah. So
very nice.
Yesterday.
Yeah. We've had a lot of real estate going on here the last couple of weeks. We're good. Good morning, Tanya. How are you?
Good morning. I'm doing good.
Good. All right. So today's rev up is financing the sale. Which Tyler, you actually kind of mentioned this yesterday a little bit about having your buyer pre-approved and stuff like that. So yeah, obviously a big part of working with your buyers is getting them approved and being able to buy a house financially, which is a huge part of what we deal with. So today we're going to be talking about financing the sale and that process and how it works. We do meetings almost once a month with one of our lenders that we work with, Movement Mortgage, and I did one with Garrett with Movement Mortgage just last week. You guys should definitely try to attend those and get to know some of these people in person. And build that relationship, which would be great for you guys to have somebody that you actually know and can talk with and text with and work you through some of these deals. It'll be super beneficial for your careers and for getting you through some of these tough situations that you will absolutely encounter. Yes, it is how it works. So the basic loan types, obviously FHA, VA, and conventional, loan estimate, closing disclosures, and things like that are going to be some of the stuff that we go through this morning. Karen is finishing up a very intense workout. She'll be back with here in just a minute. Let's see. FHA, VA, and conventional. Anybody want to kind of describe those three besides what's on the screen? Or do you think most people have a preference?
Yes, conventional is preferred oftentimes. VA can get tricky because if the house isn't in tip-top shape, that can cause some problems with the inspection. FHA also has some pretty tight requirements as well. You want to be making sure that everything that all the big five are working. FHA also helps people have that lower down payment, which is going to be critical during the phase of where we're talking to people about affordability.
Yeah. Yeah, thank you. So yeah, I mean, typically, in the past, people, they've preferred, obviously cash is always king, but when it comes to financing, it's cash and then conventional and then FHA and then VA, and kind of the order that people would prefer things to be accepted. But that's on the listing side, right? That's what the seller prefers to have. On the buying side, when we're helping a buyer, we want them whatever loan type they can afford, right? I mean, at the end of the day, whatever's going to be best for them, right? We can't push them conventional if they don't have the down payment, right? And that's a big part of going to FHA is you're going to have a lower down payment. Obviously, we can't push them VA if they're not a VA. But if they are a VA, we can't push them conventional or FHA if it's not doable for them. VA, you're not putting any money down, right? So that's a big difference, and that's why a lot of veterans are going to go VAs because they don't have to put any money down, right? So what I always tell people is when you're showing homes, when you're in the MLS, make sure that you're showing homes that say that they accept the type of loan that your buyer has, and that can be a pretty easy mistake. I've done it. I'm sure Karen's done it. I'm sure most agents have done is you take them to a beautiful house that they love, and you get home and you want to write up an offer and they don't accept VA or they don't accept FHA. And now you've got to tell your buyer that you showed them a house that does not accept what type of loan they have. So that's right in the MLS under proposed financing, right? So normally it will say cash, conventional, VA, FHA, USDA, all those loan types are in there. If that's the case, then obviously you're good to show them, and that means they're probably going to accept any type of loan that you have. If for whatever reason you just see that in the MLS it just says cash, which a lot of times that's all it will say, maybe call the agent. That's what I would normally do. Is there any reason that you don't have any kind of loan types in your proposed financing? And a lot of times it's laziness, or they just forgot to add the other loan types, or they'll tell you this house will not finance, or this house will pass conventional, but we don't think it'll go FHA or VA, right? So try not to put yourself in a bad situation, but just make sure you do research in the MLS before you start showing stuff. So FHA loan, maximum loan limit, down payment requirements, down payment gift, okay. You might know what a gift is. Karen, have you had your clients that use gifts before?
I've had a few clients consider it, but it got a little tricky. A gift is basically an amount of money that is being given by a family member to the recipient, and then the family member needs to write a letter stating that it is not going to be required to be paid back, because that can change the debt ratio. And basically they're under a pretty stringent review of that, because even though the gift is available, the banker will vet it out pretty carefully. So make sure that it truly is a gift and not something that is being said one way or the other and turns out to be a loan.
Yeah, you can definitely get in trouble for that. And that's, something you have to be very careful with. I mean, and a gift, why would you need a gift? Well, maybe your down payment, which is a requirement for FHA, is normally around 3.5%, right? Maybe it's a $400,000 house and they don't have that money and they're getting a $10,000 gift from their parents, right? Which is all fine and dandy, right? They can do that. They can send the money over. They will have to write a letter, but the bank will vet that out and make sure that's a gift. So when you're getting your buyers approved, let them know that, hey, you can get a gift if you need from your friends and family. And then you can also do seller credits, which is also a good way to help with money down. But gifts are pretty common. VA, no down payment, right? that's pretty huge. Some of the other things that come along with VA is going to be a much stricter appraisal and a much stricter inspection, right? So they're going to do VA, which I've done quite a few last year, and they all went through fine. They're going to be a little bit pickier with things, right? I know you can't have a piece of wood under the house on a VA. They will literally not fund the deal if there's a piece of lumber under the house. So, I mean, just like little things like that. There can't be any cracked paint. You got to make sure all that paint is scraped off the windows. So there's just some little nuances with VA loans that they're going to be a little bit stricter. The loans typically have to be approved by someone higher up at the end of the loan process. And typically VA loans take a little bit longer, right? Again, if that's what your client has, then by all means, go buy a house with it, right? Don't discourage them from using a VA loan or try to push them to FHA or conventional. You can definitely get it to go through. Just need to make sure you find the right house that's going to work. Conventional. So conventional is going to have typically a little bit more money down, right? And a lot of times, I think most people, when they think about buying a house, I think the most common thing is people think they have to put 20% down, right? If you ask friends like, I can't buy a house right now, I don't have 20%. That's not always the case. Even with the conventional, a lot of times it's only around 5%, right? Maybe on a second mortgage, it can be a little bit higher. But conventional loan is if you have the credit and you have a little bit more money to put down, conventional is going to be a good way for your client to go. And it's the easiest of the inspection and appraisal processes. On the FHA and VA, you know, if everything in the house is not in not perfect working order, but pretty close to, then you're going to have some things fixed through the loan process. Which again is fine, but you know, conventional is definitely the preferred of the three. So common challenges, obviously the credit score is usually the number one, right? It's one of the biggest things that we deal with is their credit. Obviously we deal with a lot of divorce, child support, judgment liens, name changes. Any other things that are challenges with getting a loan?
Right, Ron, this is Carlos. I do have a quick question.
Go ahead.
So, age. How much does age play a factor?
Age. I mean, obviously, if they're younger, they might not have credit built up. So that
I'm saying, as far as older.
Older. I mean, that's a pretty good question. I don't know that they discriminate against someone that's in their 80s that's getting a loan. I just had somebody who's 84 get a mortgage and pass. So I don't know that it's any stricter with age.
Okay.
Okay.
I've never heard ageism in any of the conversations that I've ever had with anybody, and I've worked with a variety of people as well. I don't think that they can do.
Yeah, I don't think that they can.
That's discriminatory.
Yeah, you understand it, right? If it's someone's, 95 and getting a 30-year mortgage,
Right.
might be a little bit tough. But yeah, Carlos, a great question. I haven't heard that. So yeah, I'm not really sure. Do you have someone in that situation, or just a good question?
Well, I have a guy. He's like you said in his 70s, and he's talking about he's kind of on the fence because he's thinking like maybe 15 or however long, but at this point in life, he's not confident that he would be able to get a certain type of loan, or because so late in life.
I would push them to use your lender and see what they can do. I mean,
yeah,
and that's one thing. One of my common themes is like always push them to start using a lender, right? Get an application filled out, talk to the lender and see what they can do, right? Because a lot of your people will be surprised that they can afford a house, right? Like I just said in the previous page, a lot of people think they have to put 20% down. And when they find out they only have to put, 3 to 5% down, and they can get gifts and they can do seller credits, and not have to put hardly any money down, and they can buy a house, and their FICO score doesn't have to be 700. A lot of people are surprised that they actually can buy a house. So, Carlos, yeah, I would absolutely push them to a lender and just see what they say. I mean, maybe they put them on a 30-year loan and keep his payments low. I'm not really sure, but I would definitely push him to at least start that process if he hasn't already.
Hey, Brian, this is Karen. So I have a lender on tap. I was just texting her this question about the 70s or 80s or whatever. As long as they're 18 and they meet all the other requirements of the loan that they're applying for, there are no restrictions. Now that's the one that I'm working with is Prime Lending. Okay, and that lender just told me those specifics.
Gotcha. Okay. Yeah. Thank you. Yeah.
Great. Thank you, Karen.
Yeah. Yeah. That's actually a great question. But yeah, like I said, I would push them to a lender. If you don't have a lender, I'm sure Karen has a few. I have a few. Garrett with Movement Mortgage. If you guys don't have his information, I can put it in the chat. Super nice guy, very intelligent, is always willing to work with you guys. If you guys just need I mean, he can even give you guys CMAs on stuff. I mean, will go out of his way to help you out. So he can tell you the difference in renting versus buying, which is, cost of renting now versus buying later. So if you have a buyer that's on the fence of, well, rates are high, maybe I should wait till next year, he can send you a great chart that'll show you, hey, if you buy now, even if rates are higher, the equity that you build in the next year is going to be more than worth it than waiting a year. And the good thing is you can always refinance if rates drop, right? So great tool. I'll put that here in the chat in just a minute. But some other things to go on this, employment, right, is a common challenge, right? And length of employment, which is
I have a story about employment, guys. I'm just going to change it for a minute. I
Yeah,
had
go
these
ahead.
young kids coming in from Connecticut. They're going to move here. I talked to the lender. We got them all positioned. They're going to move here and they're going to take a job and camp for 6 months and build, some time as an employed person, because there's usually a 90-day probationary period. Okay, so they go ahead. 2 weeks before they close, she quits her job.
No.
Unbelievable. We almost didn't make it. She had to go find another job in the 11th hour. These kids, they have to have employment.
Yeah, that's one thing you want to make sure your people do is A, they keep their job, right? B, they don't buy anything before close, which is a huge problem, right? So this is Garrett Wood with Movement Mortgage. Give me just a second, I'll get his email address in there as well. If you haven't reached out to him before or met him before, shoot him a text or an email today and just introduce yourself. Say, hey, I was in Brian's meeting this morning. He mentioned you were good. He'll take you to lunch. Whatever you need to do a one-on-one Zoom with you. But super helpful. And you always want to have somebody on your side.
The other thing that I would look for in a lender, guys, is somebody who's available to you.
Yep.
Somebody that will speak to you after 5 o'clock on a Friday or even 2 o'clock on a Sunday afternoon. You really do need that.
Gotcha. So that you guys kind of get all that stuff in there in the chat.
Hey, Brian, do you usually, if you get a lead, will you usually just take a chance and go show them a home if they say, yeah, I'm going to get a pre-approved or have a house I'm going to sell? Like what's kind of your standard there?
Yeah, I'm okay with that. I usually am going to ask them if they've been pre-approved yet. If they say no, then yeah, I'm definitely fine with showing them one house, because that allows me to build rapport, and that's always my biggest thing. So once I build the rapport, and if they don't have somebody that they're going to use, then I'm going to push them to my person every single time, because it's going to make your job so much freaking easier. And everyone banks with somebody, right? Everyone, no one keeps their money in a mattress anymore, right? So everyone has a bank that they go to. Everyone wants to use Rocket Mortgage or something online. pushing them to use your own people is always going to be easier. The process is going to be so much more streamlined. But yeah, to answer your question, yeah, I have no problem showing a house or two. But especially if it's a new lead, right? If it's somebody I already know, like I'm going to be like, you need to get a pre-approved ASAP. But the difference in, I just talked with someone this morning. The buyer was using someone that they wanted, and they're out in California, so they're a couple hours behind us. So we just had a deadline this past Friday at 5 o'clock for due diligence, and this company is several hours behind us and is sending us stuff at 7 p.m. Well, we've already missed our deadline, and now we're not closing on time this week, right? Things like that happen. And again, there's nothing wrong with a company on the West Coast, but you need to make sure that whoever you're talking to, like Karen said, communication is the biggest thing, right? I guarantee I could text Garrett right now, and by the time I look up, he's already texting me back, right? And I can do that at 9 o'clock at night, right? Yeah, I mean, that's the biggest thing, is having people that are going to work with you, right? So if you've got a lender that you have no idea who it is, and they're not giving you updates several times a week, it's going to be a mess, right? And then you look bad because the listing agents breathing down your throat want to know why you're extending a deal. So yeah, make sure that you find someone that again, if it's not Garrett, if it's someone else, it doesn't matter, but make sure that you build a relationship with them and get to know those people.
And if they're cash and you're asking, are you, if they're saying, no, I don't need a pre-approval, I'm cash, do they just scratch out their bank account number? Like, what do you usually do for that? For proof?
Yeah, definitely want to get verify that they have the income. But again, I would do the same thing. I would still show them a house or two and get to know them a little bit before I ask for a screenshot of their bank account. But I would do the same thing. Make sure you at least get a screenshot or from their computer or whatever, give me a bank statement or whatever that they have. Yeah, I mean, that's actually usually tougher than asking them to have a pre-approval, right? Because showing I'm not showing anyone my bank account, right? I'm not going to screenshot. So that's a lot of times a little bit tougher. But so sometimes they'll actually want to go to the bank and just have the bank, and not all banks. I don't think Bank of America does anymore, but most banks you go to, you can go and say, hey, can you write me a letter saying I have the funds to buy this house, and they will write that Stacy Smith has the funds for $147,000 for this house, right? So it doesn't have to show the total amount that they have in their bank account, but it shows just the amount. So a lot of banks will do that as well. Appraisal issues. We kind of spoke about this already. If you think it's going to be tight, I mean, conventional is going to be the most lenient of the appraisals. So if you got a house that's right around 200,000, there's a good chance with the conventional is going to come back fairly close. FHA is a little bit stricter, and then VA is typically the strictest of them all. So just make sure that if it is a VA, and if you're putting a lot down, due diligence down, and you think it might be a little bit overpriced, you kind of want to make sure that you talk to that listing agent and say, hey, like, if this comes back under, are you guys going to work with us on this? Because if they've got a hard number in their head, and meaning, let me break that down more. So if you think this house is going to appraise at 180 and you've got it under contract for 200 and it's a VA, and your buyer doesn't have that $20,000 difference, but they've put $2,500 down due diligence, right? Just know that they're going to lose that money unless you've already talked to that listing agent and they've told you, like, hey, if it comes back, we'll meet you, or we'll come down. So those are some things you just have to be wary about going into it, so you're not hurting your clients, if that makes sense. What is a loan estimate? So you got any of this yet? You probably have already.
No. Yeah, I have for me, but not for my client yet.
Okay, gotcha. Yeah. So when you first work with a lender, typically within the first couple of days of you filling out that application, they're going to give you some rough numbers of what basically your interest rate, monthly payment, closing costs, all that stuff would be, right? And again, these are rough numbers, right? Because typically at this point they haven't ran all your ducks. So at this point they might not even have like the house specific house that you're going to buy, right? So you don't have everything yet, but they're going to give you a rough number. It's very important that with lenders make sure that they disclose everything to the potential buyers, right? There's no hidden costs or anything like that. So they have to be very, very good about disclosing everything. And you want that as well, because you don't want your buyer thinking they can afford a $400,000 house and then come down a week before close and they should have bought a $350,000 house. And that is happening now anyways, is because rates are changing, right? So you're going to hear a lot of rate lock, right? That's a new term that me and Karen haven't had to deal with in the last couple of years until the last 9 months, right? So rate lock.
So Brian, how long does Garrett rate lock? Will he go up to a year, or is it still a 90-day, 60-day option? Because I've heard
he was
saying,
just talking about new builds locking it out pretty far out. But I think it just really depends on the rates. But yeah, I mean that's something you want to work with your lender and find out is what Karen just mentioned, is like, hey, if I get locked in now because rates just dropped Monday, I'm just saying this hypothetically, to 5.5, can I get locked in, and how long can I get locked in? Right. So if you're only locked in for 30 days, if you're looking at houses now, you're probably 30, 35 days out, right? What you see a lot of times is that rate lock closes, ending right before they're about to close. And if it goes up 1%, they might not be able to afford that house anymore, right?
one of the other things that I'm hearing as a term is also if there's a rate lock and then for some unknown reason, the rates go back down, will that banker readjust to the lower rate? That's another very important part, which will make you appear like you know what you're doing. So you do want to make sure that you understand what all the small fine print is from that lender.
Absolutely. And Garrett mentioned that as well. I mean, they can do that. So I mean that's something. I mean, you want to be protected if rates go up, but you also want to have the benefit of going down if the rates go down. Yeah. So rate lock is pretty big right now. Know how long the rates can be locked for. Yeah. Just one quick second. All right, sorry about that. What is a closing disclosure? So if you are working with your buyer, or if you're on the listing side, please understand that whoever that buyer is needs to receive this closing disclosure 3 business days prior to closing, right? This is something that if you're the buyer's agent, you need to be in constant contact with the lender. If you're on the listing side, you need to be in constant contact with the buyer's agent, making sure they are constantly talking to the lender. A lot of times as a listing agent, I will talk to the buyer's lender. I don't care. Like I need to know what's going on, because if this CD isn't sent out 3 days prior, if we've got closing on Friday and I'm checking with them on Wednesday and they don't have this yet, guess what? We're not closing, right? And understand, when people are expecting to close, guess what they're doing? They've got a U-Haul, right? So they've got a U-Haul ready for Friday. And because that lender didn't send that CD in time because they didn't have all their information in, now we're closing the following week, right? So now you're rescheduling movers. And guess what? A lot of times on the listing side, you know, when things get pushed out, they're also buying a house, right? And that person that is also buying a house. So it really daisy chains and can really affect a lot of things when your closings don't happen on time. So you always really want to make sure that CD is received 3 days prior to closing. And the CD is really just going to have everything, all the final numbers about the loan, monthly payment cost, rates, and all that good stuff. So a very big part of getting to the end is making sure that you're in constant contact with the lender. Can you just pop back off? He was just on here. Garrett, you there? Can you just drop off? Morning, Garrett. How are you? You're muted.
Good morning. How are you guys doing?
Good, man. Good. Thanks for jumping on last minute. Got some people asking some good questions this morning, and you know, I know it's kind of last minute for you to jump on, but I've already put all your information in the chat here, so everyone can see it, and got your link and everything. But just had some good questions, and you know, I just thought that a lot of these young whippersnappers don't have lenders yet, and it'd be obviously Karen's got a few, but some of these other people don't have a preferred lender yet, and maybe you'd want to introduce yourself. And then also Karen mentioned a good thing is, you know, how long can you do rate locks? And another benefit is if you have a rate lock but rates go down, can you do that? So I'll let you go ahead and introduce yourself and chat for a few minutes if you'd like.
Yeah. So like Brian said, my name is Garrett Wood. I work with Movement Mortgage, one of the preferred lenders with Realty One Group as well. So that's the big thing, just touching on the rate lock, because that was one of the questions, is we have lock options from 7 days all the way up to 360 days. Once you get past either the 90 or the 120 mark, you get into the extended lock section. And so that kind of comes with its own different rules, kind of upfront fees that actually get applied towards the closing once they close. When it comes to rate drops, if it drops a full point, that's kind of your threshold for being able to look at it for the float down option. We do offer that as well. It's something that they can do. And on the extended lock version of that, if it's like one of those future things and it does drop down, we automatically take a look at the drop down option. It's either 30 or 60 days before closing. And that one is basically a no cost to the borrower as well. So that's the biggest two things there. What other questions do we have? We'll start with the questions first.
So the extended lock, there is a cost involved in that.
Yep. So they recently changed that. It used to be a flat half a point for no matter which one. Now, if you're locking for 180, I think it's a quarter or 3/8, 0.375, and kind of goes up from there. But whatever they do put up front for that gets applied to their cash to close at the end. So they basically get that money back. It's almost like an additional earnest money that you could consider it as, since it's applied to their cash to close.
Gotcha. Okay. Yeah, other than that, I mean, if anyone has any questions, but yeah, if you just want to kind of introduce yourself and who you work for. Yeah, his Movement Mortgage office is beautiful office right by our Fort Mill office. So they are very close. Garrett actually just did a training with me last week, was actually at one of my open houses yesterday.
Yep.
Yeah. Actually I'm should be getting an offer on that this morning, hopefully.
Do we know which one? Was it someone the people who came back?
It was a private showing on Saturday that came through.
Okay.
You guys didn't have a ton of traction yesterday.
We had about 4 or 5 groups come through. One
Okay.
of them was a group that came through the previous week as well. So kind of a
Gotcha.
repeat, actually brought his friend back. So they were considering it as well.
That's a good sign. Yeah.
Yeah, he came the first week and looked for his friend. Second week came back with his friend. So
Gotcha. Okay. That's good to know. Yeah, I had a private showing there Saturday, and I literally sent them so much information on all the HOA stuff yesterday, and asking a million questions about transferable warranty and all that good stuff. Any difference on funding a deal like that on your end for a house that's still brand new?
No,
Yes,
because it's
okay.
already, it's already with one owner, so it's just the same process going through, just as it would be if it was a 10-year house.
Gotcha. Well, yeah, any questions for Garrett? Again, I've already sent all his information in the chat. I'd be happy to send all your email addresses to him as well. You guys can introduce yourselves or do a one-on-one Zoom if you like, but we're just kind of giving them the benefits of using someone versus, if you have a buyer doesn't have anybody, it makes more sense to introduce them to someone like you, who we know and work with on a regular basis and we can get information from, versus them going to a Rocket Mortgage and we have no idea anything and we can't get a hold of it. Nothing is Rocket Mortgage. But we just, we're not able to get a hold of them. We can't talk to someone on a consistent basis. They might be on West Coast, East Coast. We have no idea, versus someone that's local and knows what they're doing.
Yeah, I'll give you just a prime example of that. Last night, got a text message from an agent at 5:46 saying, "Hey, sorry to bother you on the weekend, but I have a client who is considering the rent versus own. Can you help me out? Do you have anything?" Was able to put together a presentation, a couple different pieces of literature for them to say, "Hey, look, this is your this is what the numbers would look like in your area. This is how much rent's going up. This is how much you would spend in the next 3 to 5 years renting versus your net worth growing from purchasing." So it really is a, hey, anytime you need me, reach out kind of deal. That's because it's personal, it's more relationship based there. I'll say another piece and facet of it, for me individually, is just the consumer referral program. So with any lead, especially after application and going under contract, within the first year, they have a 10-point process where I'm asking for a referral, and anything that comes from that, which is usually per person, they could probably find 2 to 3 people for you to talk to in a year. Anyone that gets traced back goes directly back to that agent. And so it's a chance for you to go out and do your stuff, but know that someone else in the background is working your leads as well for more leads that kind of just branch out and funnel out.
Yeah, that's awesome. And what's on the screen right now is something that I think as agents we get asked a lot. Like, what's my interest rate going to be? What am I going to pay in closing costs? What's my monthly payment going to be? Usually when I refer somebody, I'm gonna send an email with them in it, with Garrett in it, and introduce them. Hey, I met this client today. They haven't been pre-approved. They would love you to help them out if you're available. And that's it, right? I'm the type of agent, I don't want to step on your toes. I don't say, oh, he can do 4.5% and he can get you a monthly payment under $1,200. I'm assuming you like it that way. It's kind of like I'm the realtor. Like, I can't keep up with all the rates and that stuff. I'm gonna give that to you. I'm assuming that's preferably how you want, so I don't have those expectations and numbers in mind, right?
Yeah, absolutely. Especially because like I'll send out a lot of stuff that will have a rate on it that's probably a little bit higher than what they could get, just so that way we're always coming down lower for them than what they're seeing. And I say just about with everything that I send out, like, this is just an example. Like, if you want something tailored to you, if you want something that's your specifics, whether it be credit score, down payment program, all the things that kind of tie into that interest rate, we can develop something that's more specific for someone so they can know, hey, if I went under contract today with these credentials, this would be my exact rate I could lock into.
Yeah, and I think it's important for agents not to just get caught up in the rates, because you might see something that Bank of America puts out at X amount of rate, but maybe you're paying X amount to buy down points to get that rate, right? So maybe that's not the best option for you. So as a realtor, I'm saying, hey, look, that's out of my expertise. I've got a guy, he's awesome. I'm gonna send you his information. That's kind of it on my end. So I think if you guys are doing it that way, it's gonna be easier for you. And then you guys aren't having to try to figure out what their monthly payment stuff's gonna be, because that's really not something we should be telling people.
And the same thing on my side on the reverse, when someone has hey, we want to write a contract, we have something real estate related question. It's, hey, like, I'm not exactly sure how to do that. Like, I don't write contracts every day. Like, let me get you in contact with someone who does. Because a lot of people, especially buyers, I can't tell you how many people I've talked to. It's like, oh, I don't have to pay my agent if they represent me. It's like, no, the seller pays them. You don't pay them anything. And so they want to try to do stuff by themselves until they really figure out that one, it's, a free service for them. And so, yeah, that's the biggest thing is if I don't know something that, because it's real estate related, I'm referring that out and relaying it back.
And think about what he just said. And it's the most common sense thing ever, but a buyer not wanting to sign your buyer representation or work with you is crazy because they're not paying for it, right? The seller's paying the commissions. Like, why would a buyer not ever use you, right? So that, in your head, when you should have that confidence always going into it. It's like, look, you're not paying for this, right? Like, use me as much as you can. This just benefits you. It just makes sense. It's such a no-brainer. Good. Do you have anything else for us? I can shoot you an email of everyone that was on here if you want to reach out to them. But I think everyone else has got your information as well. But yeah, man, appreciate you jumping in on such short notice this morning. I'll keep you posted if I get any offers on that one from yesterday.
Yeah,
Oh.
let me know.
One question, how long is the pre-approval process?
So it depends on their situation too. If there's someone who's like a W-2 employee, standard pay, I can get that out same day as long as they can get me the documents. If they need to be submitted for any reason, let's say they have variable pay income and they're under 2 years and they want to go conventional, we can get that to an underwriter, and that's usually the next day or the second day that it can be pre-approved. And that's fully underwritten at that point.
Thanks.
Yep.
Sonia, you got any questions?
I do. I actually was thinking VA loan assumption. Is that common? How do you do that? Like so my husband's a veteran. We've had VA loans in the past, and I wanted to kind of know more about that whole VA loan assumption.
Yeah,
program.
I'll send you some more on it. Assumptions are really tricky because there's a part for where they're selling and what they owe, where if you're assuming that, if they've been in it for a little bit, which is kind of, you're probably looking at 2 years by now, is if they're selling it for market value and you're really taking over that mortgage, the difference from the mortgage and what they want to sell for, it's got to come from somewhere, because you're assuming the mortgage from the current lender. So let's say that there's this 270 left that they can send back and it's 300,000. Like if you have 30,000 plus any closing costs for title stuff, it could make sense then, depending on how long you're going to live on it. Assumption stuff only happens very, very few and far between. And plus, and the other thing, the flip side of that too, especially with VA loans, is a lot of time when someone assumes your VA loan, you do not get your VA benefits back. So it may be more difficult for you, or you may have to pay more for your VA funding fee moving forward because your entitlement's going to be lower, your benefit packet will be lower. So that's another thing to think about too when someone else is assuming your VA loan.
Okay, so if the seller is giving their VA loan to somebody else, they're no longer able to qualify for a VA loan for their house, like they're trying to
They
buy.
could. Sometimes it's not the 100% financing portion of it.
Okay.
So that's yeah, they're just not getting their benefits back. It'd be like if they went to buy a second home. In certain circumstances, you can still have it like that. Their entitlement's lower, so they may have to put something down.
Yeah.
But yeah, if they're giving it away, they're giving away free entitlement for themselves.
Okay. I see that, and I just read that like there was more changes coming for that in 2023.
Yeah.
For the loan assumptions and how to do them and stuff. So
Yeah, with them people asking them more, they've kind of revisited the topic of it and what needs to be done. So that'll come from the very top down and not company based, but federally.
Thank you so much.
Yep.
That is pretty rare. I mean, I haven't seen it done, but it is interesting to see that, to know that they do that. They could lose their ability to do it on the next one. So I didn't know that. So.
Yeah, because the loan doesn't go away. The entitlement and the benefit's still in their name.
Gotcha.
Thank you so much.
Interesting. Any other questions?
Yeah, this is Carlos. I do have one quick question.
Yeah.
I have a lady, actually, she doesn't want her credit score affected when she get a pre-approval. She had one lady said that it's not official until it's actually like a hard pull. Do you do like soft pulls to like get an idea of what they will qualify for, or is it not official until it's actually a hard pull?
So to send a pre-approval, we would need a hard pull. And this is when someone asks me, is it going to be a hard pull, Garrett? I say it is going to be a hard pull. You'll usually see with a mortgage inquiry, your score go down between 20 points. and we don't have to pull it again within 120 days. So as long as in 4 months you go under contract and close, we're not going to pull it again. And then I ask them this as well. I say, is there anything else that you're looking to buy with your credit besides your house within the next 12 months? And if it's no, then their credit score dropping from a 760 to a 740 or even a 680 to a 660, in the grand scheme of things, it doesn't change how their life is going to play out, besides the fact that they're going to get a home, have a home, start building equity. And then within that year, like I just had like on mine, like I've been in the home for a little bit over a year now, and just got the notification this morning, hey, this is getting ready to fall off of your credit score. Like, see how it changes. And that was just through Credit Karma. Credit Karma is probably about 20 points higher than what we'll see on our side too. So that's another good indication. And so when it comes to qualifications on my side, I'll say, hey, what is your Credit Karma score or your experience score that you see through your credit card? So we'll take that. And then I'll say, hey, what's your income, per month, hourly, how many hours do you work? I'll say, hey, do you have any car payments? Do you have any student loans that are in deferment or anything like that? Credit cards, loans that you're just a co-signer on. And so we can get a good indication on how much they would have for a mortgage left over, and then compare that with the interest rate, taxes, and insurance kind of in the area. We can get a good ballpark without even having an application of where they would be around. And if that all sounds good for them, that's when we go for that full application to go ahead and say, hey, here's your pre-approval letter. Here are 3 or 4 different options that you can look at, whether it's a conventional FHA, USDA, different down payment options, down payment assistance options, just because everyone's situation is a little bit different with what they need, and then move forward from there. So the biggest thing is do they plan on buying something in the next 12 months, which should always, if you're looking to buy a home, should be no. So even if it does drop, it will go back up before you try to make any more major purchases. And the second piece of that is we can still figure out a roundabout to make sure it'll make sense for you to have your application pulled for what you want.
Okay, cool. Thank you.
Yep.
I was asking a tough question today.
Like it's always it's just like last time, everything's overcoming objections, and objections are just questions.
Yeah, I feel like the soft pull versus hard pull is always a good question. It's always, I like, for us realtors, for the most part, it can be hard to answer. So that's good.
Yeah, we can do an unofficial way of seeing how much you would qualify for, and then make it official with the full credit pool.
Good to know. Well, guys, that's actually the end of this as well. Obviously, let's focus on our habits. Make at least 3 calls every day. Add 3 new people, and a total of 6 new notes every single day in your CRM. So hopefully you guys are spending your time in your CRM. I know Garrett, even on the mortgage side, is spending time in his CRM. That is your lifeline. So make sure you guys are doing that. Anyone have any questions overall, not just for Garrett, for me, or for anything else? No, super quiet today. Everyone needs a Red Bull this morning. All right. Something in the chat. Thanks. Thank you, Karen. All right. Well, everyone have a great day. Have a great Monday. Get out there and work. Garrett, again, appreciate you jumping on short notice.
No problem. Thank you, guys. See you.
Thanks, guys. Bye.